Hey everyone, welcome back to Crypto Cash. Thank you for joining me here today. We're going to take another look at BakeryToken. And we're going to see if we can help you find a good entry point and obviously stay profitable in this market. There's been a lot of higher highs recently and I think it's fantastic. So we're going to take a look at the stock charts here. This is strictly a technical analysis. No fundamentals. I just like to look at the data and make sure we can help you make an informed decision. Always do your own research, and please, of course, just note that I'm not a financial advisor and this is for educational purposes only. Before we get started too, I ask you go ahead and contact me on Telegram or Twitter. The links are in the description below. Let's go ahead and get to it. All right, folks, let's go ahead and take a look at BakeryToken. Now, looking at BakeryToken here, as you can see, there are some significant higher highs, and I just recently analyzed this one yesterday, and you can tell this is where I was at yesterday. So the price was right in the range of about $2.60 up to about $3 essentially. And in this channel here, I was recommending that we wait for the price to bounce off support. It did, and rejected and came back down. And as you can tell, went on a pretty strong bull run the last 24 hours. It was fantastic. Love to see this here. So what we're going to do next is just take a quick peek at the big picture. Normally I analyze with comparing Bitcoin, but Bitcoin's been pretty straightforward. In fact, why don't we just go ahead and take a quick look at it. It's just in a channel. There's nothing much going on right now. Normal Bitcoin right now, consolidation before likely a breakout. I guess something to note on Bitcoin is the fact that the 100-day moving average was tested and rejected today. So that's something to note, to know as well, because we're well past the 50, but the 100 and 200-day moving averages are the larger, more substantial moving averages that you want to be mindful of. Okay, so if we look at that and then we look at Bake, as you can kind of tell, there's not a significant correlation, right? They're not on the same level, so whatever Bitcoin does at this point likely will not adversely impact Bake that much, if that makes sense. Okay, so that's kind of just something I want to bring to your attention. Now let's go ahead and look at the analysis here and the technicals. So first thing we do is we always look at the one-day chart just to kind of quickly get perspective on the big picture. And looking at the big picture here, you can see, same as yesterday, RSI is overextended. We've had two really strong high volume days. This bar just started, and we've also got a MACD that is overextended. So nothing new there, pretty simple, pretty straightforward. Looking at the 4-hour chart, essentially the same thing. And look at the RSI, it's continuously overbought, hovering between 80 and 92. So it's pretty high. Again, I don't recommend taking entry in scenarios like these, but when there's momentum like this, you kind of got to jump on board. So hopefully some of you got in yesterday, because typically I don't recommend jumping in when we have such extreme oscillators, but there was some pretty good news that came out, and I believe Bake had some things going for it, so that's another reason why the price jumped up. So again, this is a strictly technical analysis. We don't worry about the fundamentals, but note that you always want to look at fundamentals too to identify why the price is jumping up the way that it is, and that's likely causing a majority of this increase right now. Okay. Other than that, we got the MACD at the kind of at its peak, so to speak. There's a strong chance we might see a sell-off or consolidation soon. Usually when there's 48 hours of straight bull runs, it's going to start tapering off eventually. Okay? That's usually what we see in crypto. There's a few exceptions, but I would expect for the price action to slow down and to see some form of consolidation soon. Looking at the 15-minute chart. This is where it gets interesting. Okay, so yesterday we were right here. Let's focus on the last 24 hours. And looking at the last 24 hours, what do we see here? First of all, RSI is calming down a little, which is good. Now again, the validity of RSI and MACD isn't super high on a 15-minute chart. It helps you take entry, but on the big picture, again, the 4-hour chart is probably the most important thing to identify when it comes to RSI and MACD and how they actually influence the big picture and how that's affecting everything. But for right now, let's just focus on the important technicals, which to me are usually always the actual volume weighted average price, as well as support and resistance levels. Now, when the price is moving like it has recently, sometimes the best thing to do is to use a Fibonacci retracement. We could do that here. I can show you what that looks like. just for the most recent price action so we can find a good entry point. But for now, why don't we go ahead and just mark our own support and resistance lines based on what we see here so far. So as you can kind of tell, right around 375, 376, we had a 1, 2, 3, 4, 5, 6, test almost 7 times this resistance level before it eventually broke up. So let's go ahead and put that on here. And what's kind of cool is you can see here, this is how it usually works when a resistance level is tested multiple times, it eventually breaks, and it breaks hard. So as you can see here, you see this long bar right here. That is what happens when it breaks out. And these are the two green bars I'm usually referring to. So if you can try to find 2 50-minute green bars that are staying above the VWAP, then this could have been a good entry point. Again, it's easier to say now when that we're not there, but generally speaking, that's what I try to always practice, essentially, is to ensure that you wait for confirmation. So as you can see, the price was confirmed here, jumped up, and it came up and had a little bit of a sell-off there and came back. Okay, so that's kind of what we're looking at there so far for the 15, and just note the price is over VWAP, but at this point, again, you see how high it got from there to there. In fact, let's go ahead and see what that percentage is. So from VWAP, it's almost a 20% variance between VWAP and the price, the highest price, basically the all-time high. So when we have a variance that large, it almost always comes crashing down. So when you see the price come up that high and it's that far away from the VWAP, that would be a good indication to trim off the top. So I know a lot of my subscribers are asking me, how do I make money in these kind of markets, right? How do I trim off the top and not get too greedy, so to speak? It's easier to want to do because you see the higher highs consistently happening, and you want to just go ahead and let it ride. But if you're smart, you would take, and again, this is only my opinion, this is what I usually do. I take somewhere in the range of 10 to 20% off the top. So I sell 10 to 20% of my total position when I see that variance getting so large from the VWAP that it's likely to come crashing down. So again, you can see that happened. Same thing occurs back here too when the VWAP is significantly higher. But I can tell you that that's a pretty good rule of thumb, is anytime the volume weighted average price has a variance of anywhere between 10 to 20% away from the price, then that's a good sign to essentially take a profit. Okay, you don't have to sell your whole position, leave most of it in there, but just take that little profit. And ideally what happens is when you take that little profit and the price comes back down, just like it's doing right now, you can reinvest that amount and essentially average up your total price. So you can essentially make things a lot better. So just something to consider. Again, you don't have to do that, but that's just a thought. And that's essentially what I like to look at there first. Next thing we want to take a look at would be maybe a shorter time frame, kind of see what the price action looks like. So let's just go ahead and hop down to the 1 minute chart. We can see down here, this is low. That is essentially our support level. And we can see the price, massive sell-off, big retracement, and now it's coming back up. Okay, so what we want to do in this situation here, I like to use this. I don't typically do this, but when the price action is moving as much as it has recently, I think it's important to consider using Fibonacci retracement tool. That works really well in these situations, because even though we got these support levels here, like you can see this is a support and resistance level here, and there's another one here, possibly one there, this tool really helps a lot. So this is how it works. You go ahead and select the lowest point after a retracement. So this is a retracement here. We pick the lowest point and we come up to the highest point. Now do you see these channels here that it's creating? This is interesting, right? Because this is essentially a support level, right at about 61.8%. And we got the 50% line. And these are all industry standards, so anyone that's like a very large industry trader, they're going to be using tools like this. So the important thing to do is to be less greedy than the others, right? So what I mean by that is when I use this retracement tool, I like to add lines just below where these lines are at specifically to ensure that I take profit at that point, right? So just be a little less greedy than the next person. Okay, so just say, for example, the price was down here and it comes up to this point right here. if you have a sell point right around here, then when the price comes back up and you sell right in this range here, you would have been able to take profits. Yes, true, the point continued past that, but you would have been able to do that before there's a sell-off. Do you see the sell-off right here? Had the price not continued upwards, you could have taken your profits before everyone else did and been out and been safe. Okay, so if you use a Fibonacci retracement, it's helpful to understand what everyone else is looking at. You don't want to follow it to a T because in most cases you can get burned. Anytime I've used the retracement tool in the past, I try to sell just before it hits these lines. And these are major support and resistance lines according to the industry standards. The industry giants use these for the most part. So again, look at the example right here. With the price coming up right where it's at, it would have been advantageous to consider selling right in this range here, because there's a chance that the price could sell off and you want to take your profits before it gets too high, right? So we'll see what happens with that here in just a moment, but that's generally the concept that I like to practice with others, is just to use this lightly. It's not exact science, but it is traditionally a pretty good understanding of where everything's at. Because if you see these, look at this here, this is a support level, another support level, and of course resistance and potential resistance there. So if you're going to use the Fibonacci retracement tool, just make sure that you always get out just before it hits these support and resistance levels, because it really helps you kind of stay ahead of the curve, because that extra 2 or 3% isn't worth it if you can still take profits and still stay in the green. Okay, so that'd be my recommendation here based on what we see so far, is to consider using that. And then of course use your support and resistance levels. So for me, take an entry in this position here. I'm more of a conservative trader, right? I'm risk averse, so I would honestly wait for the price to come back down, because it's shooting up right now, and see what happens. And I would wait for it to bounce off one of these support levels before I take entry. But in all reality, I would most likely be using the 15-minute chart. Let's get rid of this here. I typically like to use the 15-minute chart because I'm more of a short-term swing trader. And to me, I would wait for the VWAP to get tested again, and that's just me playing it safe. True, I will miss out on a lot of price action, there's no doubt. But I always recommend you wait when the price is this extended right now, the way that it is. You wait for some type of confirmation, and I feel like the VWAP is one of the best confirmations you could look for. But also keep in mind, you can still use that retracement tool and find good support and resistance levels. Just don't get greedy. Again, the rule of thumb there for me, that's how I like to say it, is to be less greedy than the other person. If you can be less greedy than somebody else, especially those that are holding true to that specific standard, then you'll always be in the green. You'll always be able to take your profits before the price reverses on you. So that's always worked out very well for me when I do anything closer to more of a day trade, or just say some short-term swing trades where I have to look at a shorter chart. I feel like it's very effective to be able to understand those resistance and support levels. I typically like to create them on my own, honestly, but I do think the Fibonacci retracement tool is kind of just an extra little tool that you can use as an extra advantage to know the correct entry and exit points. Yeah. So that is essentially what we're looking at there. So yeah, Bake is quite interesting the way that it's going. It does look like it's testing the current resistance level. Let's see if that actually see if it actually hits. I'm curious now. So let's go ahead and mark this really quick. Got a resistance at about 475. Very curious if it bounces off or if it breaks through. It's been tested twice, so there's a strong chance that it'll reject at this line and come back down, but we'll know that for sure. Well, why don't we go ahead and call it a day. Thank you for watching. We'll definitely be able to see what happens here soon, but as you can see, it's kind of retracing its steps and coming back down. There's a chance it might bounce off of this line right here that was on the retracement tool. So pay attention for that. So hopefully you found this beneficial and this didn't add more questions to you, to your current situation. But again, taking entry, You just got to be careful, wait for all the appropriate indicators, and ensure that you just wait for confirmation and don't just jump in. Take small positions. I would say maybe take a 20 to 30% position in a situation like this just to be on the safe side. In case it rejects and turns around on you, you're not going to be losing your shirt, right? So just, again, something that I like to recommend, but thank you very much for watching. We'll have more updates on this here moving forward, and we'll look forward to seeing you in the next video. Oh, again, please like and subscribe if you found benefit. Thank you very much. Have a good rest of your day.